Welcome to today's Financial Forensics Update. My name is Gianluca. Visit my website www.asintinvestigate.com. One of the signals investors often watch closely is insider buying, when company executives and directors use their own money to purchase shares of the businesses they manage. Recently, insiders at Pfizer, Berkshire Hathaway, and Albertsons have all been buying shares. So, what could these purchases tell investors? Let's start with Pfizer. Following its latest earnings report, several Pfizer insiders purchased shares on the open market. CEO Albert Bourla bought 38,000 shares at approximately $26.34 per share, an investment of more than $1 million. The purchase is particularly notable because it was the first time Bourla had bought Pfizer shares on the open market since becoming CEO in 2019. Two directors also bought shares. Ronald Blaylock purchased 39,231 shares at around $25.46 each, while Mortimer Buckley bought 37,632 shares at approximately $25.52 per share. Together, these purchases represented roughly $2 million. Pfizer recently reported revenue and adjusted earnings that came in better than expected. Strong sales of Eliquis, the company's blood thinner, helped drive the results, while Pfizer's cancer business continued to grow. However, investors still have reasons to be cautious. The company's full-year outlook remained weaker than Wall Street had expected, even though Pfizer raised its revenue forecast because of stronger sales from products outside its COVID portfolio. Now let's turn to Berkshire Hathaway. Insiders at Berkshire have also been purchasing shares. Chief Financial Officer Charles Chong bought two Class A shares for approximately $1.5 million. Each share cost roughly $765,000. Berkshire's General Counsel, Michael O'Sullivan, also purchased 488 Class B shares for around $250,000. These transactions are particularly interesting because Berkshire Hathaway does not provide stock-based compensation to its employees, including its senior executives. That means these executives were using their own money to buy Berkshire shares. The timing is also noteworthy. Berkshire's stock has delivered a relatively modest performance this year. Both Class A and Class B shares are up only slightly, while the S&P 500 has gained around 14%. That relative underperformance could be one reason some Berkshire executives believe the shares offer attractive value. Finally, let's look at Albertsons. The grocery retailer recently reported disappointing earnings and lowered its outlook for the rest of the year. Albertsons is dealing with several challenges, including higher costs, weaker grocery sales, and financial pressure on lower-income consumers. Following the earnings report, the stock dropped sharply. But instead of selling shares, several senior executives stepped in as buyers. CEO Susan Morris was among the largest buyers. On July 28th, she purchased more than 39,000 shares in two transactions, paying $11.46 per share for 20,277 shares and $11.38 for another 19,132 shares. Executive Vice President Thomas Moriarty made an even larger purchase, buying 170,500 shares at $11.51 per share. CFO Sharon McCollum also purchased 9,000 shares at $11.48 per share. When multiple senior executives buy shares around the same time, investors often interpret it as a potential sign that management believes the stock has become undervalued. But insider buying doesn't eliminate the company's underlying challenges. Albertsons reported $24.94 billion in revenue for its latest quarter. Revenue was slightly higher than the previous year and exceeded analysts' expectations. However, adjusted earnings came in at just 42 cents per share, 12 cents below Wall Street's forecast. The company also lowered its full-year guidance. Albertsons now expects fiscal 2026 earnings of between $1.75 and $1.85 per share. So, what should investors take away from all of this? Insider buying can provide an interesting window into management's confidence. When executives invest significant amounts of their own money, it can suggest that they believe the current share price offers attractive long-term value. But insider purchases should never be viewed as a guarantee that a stock will rise. Pfizer, Berkshire Hathaway, and Albertsons are facing very different circumstances. Their insider purchases come against a backdrop of earnings results, changing forecasts, valuation concerns, and different business challenges. For investors, the key is to look at insider activity alongside the company's fundamentals, valuation, growth prospects, and risks. Insider buying can be a useful signal, but it is only one piece of the investment puzzle. That's all for today's market update. Thanks for listening, and stay tuned for more analysis of stocks, markets, and the signals investors should be watching.